What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Wednesday, February 28th. Well, guys, today was an incredibly meaningful day for Tesla, and tomorrow is probably going to be, I would argue, even more meaningful, because yesterday, if you watched yesterday's video on Tesla, we discussed that dreaded $200 a share region that we just can't seem to crack, at least upon the close, for the last couple days now. And the more we ride that level and the more we struggle, I think the more crucial that level becomes, and the more, I would say, triumphant a break and hold is going to feel. Okay. Let's start, though, by taking a look at the 1-minute chart. The stock is, of course, essentially flat after hours. You know, the volume's very low in the after hours regardless, so take it with a grain of salt. Just really quick, taking a look at the 1-minute chart, just so you guys have an idea of what I am looking for on a stock like Tesla. Because you guys know, I'm a scalper at heart. Scalp trading is what I do every day, so I'm always looking for opportunity to generate revenue intraday, really on any name, but specifically on Tesla around a core position. And I get a lot of questions about, like, how to approach, like, what trading style to approach with, depending on what kind of stock I'm looking at, or just what kind of trading style to approach with in general. And here's how I approach things. On blue chips, my playbook is much smaller. And that's for good reason. It's because it's much harder to come around edge on big blue chip names, because it's so much more algorithmically driven, as well as there's a lot of random orders going through with rebalances and fund moves. And the ratio of actual active traders who are in the same mindset of trading off of psychological levels, the ratio is much smaller. Like, they're a much smaller piece of the pie of total volume in a stock like Tesla compared to an in-play stock. Like today, you know, we happen to have JanX was an in-play stock. Very psychological. You could tell just by looking at the movement that it was, I would say, primarily, well, at least a lot of human traders making decisions around key psychological levels, and the stocks move differently. It's quite obvious. So on an in-play stock, for example, like JanX, I might be taking a lot more frequent scalp-style trades, and they typically are quicker, okay? But on a blue-chip stock like Tesla, I trade it, right? But I'm only going to spend time trading something that I know has edge, okay, over a big enough sample size. For me, that is one of my backbone setups, a repeat offender setup, which, by the way, I basically only use on very liquid blue chip stocks and ETFs. I don't really trade repeat offenders on in-play stocks. And then there's like one or two other setups that I have in my playbook that I have found long-term in a variety of market conditions will have edge on a blue chip. One of those, for example, is going to be like a huge test or a multiple test of ATR, average true range. Okay, but for example, just so you guys are aware of what I'm looking at on Tesla as we move into tomorrow, I wasn't able to pull anything out of Tesla today, but it is a name that I scalp very often, or trade more so, on what I call a repeat offender. So had this touched and this touched, I would have been looking at this and this for potential bounce setups, because you see the 20 EMA, plenty of room within that channel for upside, you know, hitting target, right? I don't want psychological barriers in the way. That throws off the edge I have found. But that didn't occur. We were getting early bounces and sticking closer to those EMAs, and it threw off the whole setup. But just so you know, as far as a repeat offender is concerned, when I say that, that's what I mean. And it works, you know, of course, to the upside, to the short side as well. It's just a subconscious psychological setup. It's not fancy, but it has edge over a big enough sample size. And before, when I was saying, you know, like an ATR test, an average true range, that's another style of setup that I will trade. It's a reversion setup, right? Reversion to the mean when you start pushing in well into ATR without a catalyst. Those trades, they're not really scalps, right? They're more intraday trades that with the intention that they might take 30 minutes up to a few hours. So the reason I bring that up is just to make clear that what I have found in my experience is that we have to approach trading blue chips extremely differently than how we approach like scalping an in-play stock, for example. They're just different, and to, you know, procure that edge, to me, it requires different setups and different execution. So let's move on now. Let's get away from the intraday mentality and take a look at the 5-minute chart here for our daily ritual for volume profile. Trying to pull out, do we see any bias here in the market today? So taking a look at the 5-minute here, we're trying to pull out as much bias as we can by using that volume profile. So if we look here, we can see that the morning high was that 205.60 region. Okay, and if we pull up the volume here, you can see that, of course, contextually speaking, we expect higher volume off the open. That's not out of the ordinary. Volume falls, volume increases on the bounce. But what I'm thinking is really interesting here is we're seeing rather substantial volume, whereas typically you'd expect volume to kind of fade, right, at kind of a sustained pace. But we got this little pop as the stock tried to move back higher and got rejected off of that morning high that we saw basically 3 rejections off of, right around 205.50, 205.60. So keep that in mind, because I'm going to be watching that like 205.50, 205.60 region. It's always a range, never an exact penny, right? Tomorrow, because that was clearly an area of interest here today. Now let's move on to the 30-minute and take a look at levels to watch as we move into tomorrow. Really clear here. You can see that since we covered this thing last night, we have given up the 50-period moving average here on the 30-minute chart. But take note of this. We actually closed just testing that level and faded below in the after hours as the 50-period pushed higher. So I'm going to be watching that tomorrow. Bulls, ideally, I would love to see a reclaim of that 50-period tomorrow. And bears, really, I think what you guys would be looking for is not only a flattening out of the 50-period here on the 30-minute, but ideally a fade downside in that 50-period to add a psychological barrier that could do, anything possible if you're a bear to try to add downside pressure to the name from a psychological standpoint. Now, the 4-hour chart, let's take a look. You can see that we still find ourselves in this range in between the 50-period moving average on the 4-hour and the 200. And you can see that as the 200 comes lower, it's getting closer and closer to that 205.50 region that we were just talking about back on the 5-minute chart. So things are kind of starting to line up here, right? So ideally on the 4-hour, if I'm a bull on Tesla, I'd like to see a crack of that 205.50 region, right? On the 30-minute, a reclaim of that 50-period. But then in addition to all that, on the 4-hour, a crack of 205.50, like today's double, triple top, would lead us right into a test of that 200 on the 4-hour. So, listen, a pop above all of that and a reclaim of that, it's about a 3% move. That would be beautiful. Of course, any downside test of that 50, I just want to see a clean bounce. Bears, stay away from 2005 or 205, right? Is kind of your objective. Just fade downside below 200, which brings us to the daily and paints the most clear picture. Because listen, $200 a share is clearly the region to watch on Tesla. So listen, if I'm a bull, let's bring this all together now. My story for tomorrow is 2 things. Hold $200 a share, or more so claim it and close above it. But even more so than that, just get up and past 205.50, ideally get up through 205.50, because not only would that also be a crack and hold of that huge psychological level that we've been dealing with for the last week or more now, but it would also be a crack of this morning's triple top and the 200 on the 4-hour chart. Looking back here. So that would be that would be a beautiful thing to see from a bullish perspective on a variety of fronts. Now, bears, we kind of just have one objective tomorrow. Stay below $200 a share. 200, I think, as a bear is kind of the enemy right now. Okay. Now, let's take a look. What was the bias from the options traders today? We had a big sample size, 1.8 million total contracts, 1.11 million were calls, and 688,000 were puts. We're seeing nearly, not quite, but nearly double the amount of call side bias compared to puts. Now, if we break this down by time frame, the short-term speculators, the 0 to 20 delta range, 292,800 calls and about 304,000 puts. So a little more undecided here, slightly. Listen, it's really slight, but slightly leaning to the put side in the short term. But then you look at, the 3 middle delta ranges, so the slightly out of the money, be more at the money, and the little bit in the money here, those are all leaning to the call side. You get really deep in the money, the 81 to 100 delta range, this is interesting, the really long-term sentiment plays, right? Being that those deep in the money contracts on average are going to have a longer expiration, that actually flips back to put side bias. So I wouldn't be surprised if we saw one trader buying, 5,000-10,000 leap puts here, more so leaps. Those are long-term equity anticipation securities on the put side here today, deep in the money, that throws that off because, the mass, very much the majority of the time, you're going to see those deep in the money contracts leaning call heavy, just obviously due to the longer term nature of the market. So that's interesting to see. But still, with the volume getting beefed up here in the middle, we still are seeing a relatively overwhelming overall call bias on the call put ratio. Guys, I'm really curious. Head down to the comment section. Let me know, what is your positioning on Tesla? And I'm curious about time frame. Are you here tracking just a long-term position? You plan to hold Tesla for 20 years? Or are you trading this intraday, getting in and out, more so day-to-day swing trading this? Maybe you have some calls, you're short some shares, whatever it may be. I'm just curious. What do you guys, what's your time frame and positioning look like? I think this is a good opportunity. We're doing the same thing over on NVIDIA to get some data here as a community and really understand kind of what the overall sentiment might be from a retail standpoint. Appreciate you guys. I'll see you in the comments section. Talk to you tomorrow.